This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clue to Say Trading Frank. It's approximately 9:06 p.m. on September 27th, 2020. We have the end of the month coming up here, end of the third quarter. Wow. On the 30th, which is Wednesday, and then we begin the fourth quarter starting on October 1st, October, November, and December. There you go. All right. Welcome. This is our weekend, Sunday weekend strategic updates that we do a couple of times a week, primarily on Sunday and Wednesday evenings. And of course, we do a couple of other quote unquote emergency ones depending on market conditions. These sessions are recorded, uploaded to Clueless Trading YouTube channel. And most importantly, they're uploaded directly. The link for the recording is uploaded directly to on the Twitter feed within 30, maybe 35 minutes right after these sessions end. So feel free to click that for people who will be listening to it later, or if you want to review something, that you found interesting, you can just click that and listen to it, fast forward it, do what you need to do. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin and try to keep it constructive and to the point. So first of all, we're going to go back and review the same charts that we looked at some very critical low points in the market, which was last week, both on Sunday and then on Wednesday, so that it keeps it fresh on your mind as to why those predictive forecasts were so dead right. They were dead right. There's no question about it. The markets bounced hard, and despite intense volatility, printed some fantastic numbers across the board for a large number of our trade alerts, tactical trade alerts. Profits were taken, swing setups were set up, and things of that sort. All that I've been working very hard every day, as you know, and all those are on the real-time Twitter feed. So feel free to refresh your mind by reviewing them, even though you might not have been in some of those trades. And some of the trades just went berserk higher, right? Exactly. I sold a little bit earlier, but hey, who cares? Still managed to I always jump back in. And I'm talking about the Zooms and the Teledocs and the Squares. And of course, I didn't get a chance to get into Nvidia this time, but that's okay because those three alone were monsters. The SPY did very well too. Boeing did fantastic. It was up almost $9. And some good news is coming out, and looks like the follow through will continue this week. So there you go. You got to be a trader, and you got to do what you need to do. I don't want to keep on rehashing the same thing, but if you just lie around thinking, okay, the profits are just going to constantly keep on going higher all through the day, well, it doesn't work like that. We are still in an extremely volatile market. We still have a number of critical risks, for a better choice of words, in this market, both political, economic, as well as market volatility, which just comes in waves, as you know. And of course, we try to give some advance notice based on my VIX charts, which have been pretty dead right. And those things, if they get overbought intraday, then the markets pull back. They don't have it crash, but they pull back from the highs. And overall, the VIX looks like it's coming down on the daily, but on the 1 hour chart, when it gets overbought, boom, it's a mechanical derivative. And then the sell programs are triggered, so markets could be up 150 points, and all of a sudden they're only up 75 or 60 for no news. These are 90% algorithmic high frequency trading black boxes, and they love day trading, So it's frustrating for human traders, but we try to be as vigilant as possible, and I don't like getting too greedy. Just letting you know, I'm still sticking to my strategy of taking down nice fat profits on a daily basis, leaving some swing trades open, being extremely not going nuts on one stock or another. Even though I'd have some lumpy positions in some of the longer term small cap stocks like the Blinks and the Goose, Canada Goose, and things like that. GameStop. I still have the WIMI, which is just in there flatlining. So those type of things generally are not swayed that much by the market movements, but and those have delivered some fantastic results, as you know, and they have much more to go, in my opinion. So that's the way to do it, all right? Without getting too technical. So let's get into, let's go ahead and rehash some of the charts here. And please, come up with any questions and comments anyone likes to make, just, I'll certainly give them the time to do that. All right, so let's start. So let's first of all stick to this fantastic, for a better choice of words again. And I'm a little bit tired, so I can't come up with $10 words tonight, but $9 words. So I'll stick to $3 words. Okay. So bottom line is, this has been a fantastic GPS roadmap to navigate the volatility in the market, and that's the 15-minute S&P E-mini chart that we use constantly. I update it, and this is what it looks like. So we have this is the Fibonacci retracement. We have the Fib 50 right there, Fib 50 here at 3309 on the E-minis. We are at 3297 right now. We are right here. This is a live chart, obviously. This goes back to the middle of the month, or at around the 16th of September, right there. So it's a good reference point to use on this corrective phase. Just so people might be realizing how much we're down from all-time highs. Well, NASDAQ is down 9.6%. That's a pretty big drawdown. It was down about like 12 or what, 14% at one point intraday. And that's like big stuff, Like I said, you got to buy these babies when all the technicals are screaming red and or just ugly. And we looked at them. We're going to look at them again tonight. We're going to look at the NYMO, which is the New York Stock Exchange Oscillator, McClellan Oscillator, that has been a very reliable swing trade indicator, and that definitively worked. I showed that on the Wednesday webinar. It was minus 71, and then we'll see it again tonight. Okay, so NASDAQ got hit the most because that's where most of the high-flying things were happening, and most importantly, that's where the SoftBank phenomena happened, with the SoftBank, buying up crazy amount of calls on all the big, fast-moving Nasdaq stocks and the Qs. And then when they started to withdraw, obviously, they what was it? I mentioned in one of the webinars. I think they put in $5 billion to control almost $50 billion worth of stock. I mean, you're talking some big numbers here. Okay, so anyway. That's just the way it goes. So Nasdaq is still down down 9.6%, all-time highs. The S&P is down 8.1%, and the Dow is down 8.1%. Now, depending on your bias and your experience with tech stocks, that's where most of the Nasdaq stocks are, in the big cap tech space, all of them, on the Qs, which is the ETF that you can trade. There's a feeling that, hey, earnings seasons are kicking off this week with Micron coming out. I believe that's the first one on Wednesday or so. So that's going to be a little window into what's happening on the DRAM semiconductor chip side. So that's going to be, now depending on your bias, I'm biased bullish. I know Paul is. And earnings revisions for this quarter are quite low. That means analysts have projected down the numbers. So and this happened last quarter too. So when you have a very low expectation based on the consensus estimate from the big shot Wall Street houses and analysts, then the company just has to come up and do a little bit better, and boom, it goes higher. And given that there's been such a drawdown from the top, these stocks are down, the NASDAQ is down minus 9.6%, but average stock is down 10, 15. I mean, Apple was down like 20 some percent, and people still want to short it. I'm like, oh, Lord, I mean, come on. Apple was down at 1.25% intraday. I mean, you're losing 1/4 of your value on what? Like, are they losing 1/4 of their business? I mean, it just doesn't make sense. But hey, that's what happens during situations of panic. So anyway, so individual stocks are lower by more than 10, 15%, a lot of them, big names. Okay, so they have room to move if they just meet the consensus estimate and hopefully beat it a little bit. They don't have to come up with phenomenal numbers on the earnings side. They do have to have some reasonable good guidance going forward. That's very important. So all that is kicking off this week, and we'll certainly be doing the ER trades, and I'll certainly be doing Micron, that's for sure. So going back to this chart, this, as you can see, very intense volatility, but as the days go by, we start to see a pattern, and this pattern is certainly, and the E-mini futures right now are up 10.5 points, right there from Friday's close. So we're starting to see a pattern, and if you're bullish, then the pattern is a W pattern, and we're going to see that right now. What we call a W pattern is a dragon bullish right there. Let's look at the first one. Lots of chop, double bottom, inverse head and shoulders, and that's what throws traders, just drives them out of their mind, turns them from bulls to rampant bears and then back to bullish. It's just like a massive whipsaw. It's like having manic attacks, right? Because humans generally don't like to follow the middle ground. Either they're manic, depressive, or just manically, or just super happy, right? I would staying in the middle a little bit. It's very hard to do. I know, especially when you're trading with options. Oh Lord, or trading, period, especially if you're a large position. So lots of chop, but now we're starting to see a pattern developing. This is the big flash crash on the 23rd. Lots of chop here. I walked you guys through this, not just through this chart, as you know very well, as you follow the Twitter feed. I know that there were multiple things saying, hey, it's going to be okay. It's going to be all right. And this level has now proven to be massive support, which is around 31.95 to 31.98. Call it 3,200 on the E-minis, or call it 3,200 on the S&P 500. I noticed one thing over the many years, that S&P 500 over a short period of time, when it goes through these big vacillations, and especially with the volatility in the market, which are very fast and furious, things happen in hours what normally would take days, and things happen in days what would normally take weeks or years. That's just the way the markets are. So is that the S&P moves in increments of 100 points. Okay, it does. 3,200, 3,300, 3,400, 3,500, and we almost kissed 3,300, which was really extremely overbought. And I talked about that weeks ago. Even on the long-term charts, we were hitting the top end of the channel. So 100-point increments are roughly 700 to 800 points on the Dow Jones Industrial Average, ladies and gentlemen, and those are big moves. All right, and that is what we are seeing here. The Fibonacci retracement is at 3309. So it's, again, about 109 points right there, 109 points. Add 100 points from here, you're up here again, towards the 3,400 level. So the 100-point moves happen, but never in a straight line. Okay, through that, you're going to see all this type of stuff. So get used to, dealing with volatility. Even when markets were down 500-600 points, we had stocks that were up. And that's just the way it goes. It's not easy. I know it's not easy. All right. But you can certainly recover a good chunk of money, or at least if it gets too volatile and you can't handle it, just sit back. Don't trade. Doesn't matter. You might miss out on some big gains if you don't buy the lows, but at least you can still move into other positions as the breakout continues. So that's my only suggestion. So saying all that, now we're starting to see a pattern. It's extremely volatile. I repeat that over and over again. Don't fool yourself. Don't get happy. Don't get too depressed. Stay calm. And we are basically going to go up, and we're probably going to overshoot the Fibonacci retracement and go to roughly 33. Let's call it 3330. All right. So this is it would be the 3330 level would be my which is roughly 32 points, like another 250 points or so. I would say, and this is the predictive forecast that I do, and I've been more right than wrong, as you all know. It's all there, documented on my YouTube channel, and of course my real-time Twitter feed. I would say another 250 to 300 points would be the max move, and this is on the Dow Jones, okay, before we get hit with a slew of supply or sell programs, okay? And it's pretty visible right there. Pattern symmetry and detecting structural or pattern recognition, I think, and detecting structural pattern symmetry as to what happened before really works, okay? Because that's what the machines do. That's what the machines do. So if we have a strong rally tomorrow going into Tuesday, let's say, or we have a strong rally tomorrow, it opens up and kind of stays flat and tries to rush forward again and hits these levels, well, as I have always suggested and suggest again, take down some nice profits. If you're a tactical trader, if you want to sit on things because the longer term charts are really turning, they are starting to turn, and I'll show you that. Then of course, of course I have swing setups. When I say get out, doesn't mean like, I mean, I'm not here to dictate like how you run your book, but I mean, I'm not saying I get completely out. No, I just raise more cash and I take my profits and look for higher strikes and things like that. I adjust my positions accordingly. That's what I meant to say. So that's the level that I'm looking at. And you guys can see that too. On a short-term basis, that's over the next 24 hours plus. All right, good. Now, the next chart is the next chart from and for options traders, these charts are money because it gives you a very clear indication as to where you need to basically take your profits, or when you need to reduce your positions or do whatever you need to do. All right, so these are very, very important. For longer term traders and stuff, this chart doesn't matter because they're like, okay, I don't really care what happens in the next couple of days. I'm thinking about the next couple of months. So the point is that I'm a tactical trader. So at this point, given the intense volatility and the issues that are in front of us, including the looming election and all the craziness that's going to happen around that time, I would rather be more short-term orientated. It's just my opinion. All right. So better safe than sorry. Now, saying all that, let's look at the next chart. The next chart is a 1-hour chart. It's zoomed out. You've seen this many times. And make friends with these charts. All right. This was your original cup and handle going back again to the first week of September. And this is what it looks like. Again, it points up a pattern. These are more defined, very defined, inverse head and shoulders. Lots of small ones, the minor ones, and then the macro ones are these. Okay, another bottom, nice W formation, heading up towards 33.19 or so. So the markets right now, which are up 11 points or so, would be up 30 points. So we could be up 30 handles on the E-minis. And I've talked about this stuff before, and I've been pretty right. We would basically get up to the first phase, the first supply point where the sell programs come in. Okay, so we could be up plus 30, and everyone would be like, yeah, that's the way to do it. We bought this stuff, and then now it's just like bang. And it could be up plus 30 just on Boeing being up another $5. To be honest with you, Boeing honestly, I mean, I'm very bullish on Boeing, you know that. So Boeing is going to go to, in my opinion, like $250 in the next couple of months. So the point is that itself can pull the Dow up thousands of points. I mean, not thousands of points, let's say 500-600 points, 1,000 points. Yeah. So if you open up 30 handles on the E-minis, all right, I am a seller of some of the techs that I sold and rebought. I'm going to be a very happy camper first thing in the morning. Cash on the side. I always have cash on the side, but let's say more cash on the side. Because within minutes of the market, if it opens up that much, let's say opens up 20 or 30 handles, Okay, based on this chart, it can open up 30 handles, 30 points on the E-minis. That means the Dow futures will open up about 240 points. NASDAQ futures will open up higher. Everyone's going to be like, wow. Okay, so use that wow to take some profits. It's the way to look at it. Now, once it hits that, you're going to see the first level of sell programs hit. Within literally minutes, maybe 5 to 15 minutes of the market opening like that, that's almost a given. I don't need to remind you guys that. So all those nice profits that you saw, if you don't really take it, they start diminishing fast. And then you're like doing the WTF screaming at the screens, all right? Like, what the? Yeah. So, got to be fast. Got to be fast. And then, if you follow these structured charts, then we could have this. Then it pulls back again, gives back. Market could be open up 240, and then just by 10:30 or 11, it could only be up 50 points. So that means it would basically create. It would replicate this portion of the move. Remember, this is a mirror image. So this is the left side of the mirror. This is the right side of the mirror. All right. Then it finds a floor here, and then this replicates this large sell-off. In my opinion, has a good shot of replicating just the opposite. Every action has an equal and opposite reaction. Never ever doubt that. Okay, that's law of nature, that's a law of physics. Every action has an equal and opposite reaction. And this, in my opinion, has a very high probability of happening, unless some crazy stuff happens that we don't know about. Then in that case, we're going to be doing another 700-point drop in the market. I'm just letting you guys know. All right. And it's going to be very fast. What could trigger that off? There's a myriad of reasons that could. The stimulus bill just disappears because now it's really hot on the thing. They're talking, they're actually starting to make some sense. Lots of positive vibes coming out of Capitol Hill with Pelosi and Mnuchin, talking like real negotiating. That's what government's all about. So it's good stuff. So let's say let's say we get an announcement at 1 in the afternoon, like, okay, Pelosi goes, that's it, it's over. Mnuchin's like, I can't get these idiots to really get it going, and they separate. Markets will drop 500 points, easy. And if you're not watching your trades carefully, you're gonna be in the doghouse, and it's not gonna feel good. Just letting you know that that's a big risk to the markets right now. Okay, so that's basically it. And so I'm just technicals are fine if the markets are somewhat reasonably volatile. When the market goes insanely volatile, then what technicals are going to save you? It's just the way it goes. You got to take evasive action, or just stay calm, so you can see what's going on. Now let's take a look. Let's zoom out more. Now here things get really bullish. All right, this is technically bullish. Now, I've mentioned this chart a few times. I put out Twitter broadcasts, which I'm doing more often, just to keep people clued in as to what I'm seeing and why I'm seeing it. So what are we seeing here? Let's start off from the bottom. We have a triple bottom, which is very similar, by the way, to what happened here. Let me get the pen. What happened back in February, that big drop, February to March during the COVID-19 crisis. Okay, so what happened there? We had a similar situation. Look at that. Now you don't need to be a technical genius and like whoa, know all the fanciest terms. Just look at it. Like we say, let's keep it simple, stupid. The KISS principle. Just look at it. See this pattern? Multiple bottoms, frustration, big drawdowns in the market, big moves up, big drawdown. Then the market tries to go up and then creates this long tail. I kept on talking about at that time, this long tail reversals, which kept on like slipping and sliding, and then bang. And all through that, the stochastics, did the jungle dance. But There's a structure to it. It was trading in a band. It's trading in a band. It's very similar, guys. You could do another one of this. Trust me. Like I said, we could be down 700 points if the similar stocks break down. We could do another one of these. We could do a quadruple bottom. Here we had so many bottoms, then the market just took off. So I find the similarity here, which is very important, very critical, and it's also looking good on. Oh, before I take the pen away, so if if we want to make a sharp move higher, which I think is possible till the first week or the first 5 to 7 trading days in October, always normally a kind of a bullish event because that's when the pension funds, institutional funds are mandated to take in the money that's coming in at the end of the month to deploy. And given the markets have corrected so much, that's the most bullish thing here in the market right now. We have fear levels from the American Association of Individual Investors, from the other readings, sentiment readings. I mean, it's extreme. Look around you. I mean, look at yourself. A lot of traders shit scared. Some are dropping off. Remember, traders only drop off, and I'm talking like in my service, it's just like any other service. There's gonna be a lot of people joining, there'll be some people leaving. It's normal stuff. You always find like the count, like 1 or 2 or 3 or 4, let's say within a 2-week period, you drop off. Why is it always at a market bottom? Why is it not at a market top? Because they're all happy. They didn't know how to manage their trades. And I'm not blaming anybody. Hey, it's how you do it. And then right at a technical market, a tradable bottom, they quit. Human nature is just like that. So that's a big indicator too from my end. But the biggest indicator, sentiment indicators, are in the doghouse. The bulls are like, oh my God. The bears are like rising. And even within the bulls, like I said, a lot of them are doing the talk but not walking the walk. They're like, yes, market's going to go higher and stuff, but they're not deploying money. And I'm talking both individual and, most important, institutional. The big money. The big money's like, yeah, market's going to come up, this and that. But hey, how about putting some real dough in the market? Oh, we'll have to wait for conditions to improve. Yeah, by the time conditions improve, the market will be up another 1,000 points. We have seen that happen over and over again for decades, and more so now because things move so fast thanks to our great algorithmic high-frequency trading black box supercomputers. And none of you disagree with what I just said. So like, yeah, these risks used to be minimized a little bit. You hear those, hotshot analysts and big shots, talking on TV. Yes, uncertainty. Well, uncertainty is when you want to buy. Uncertainty causes bargains within reason, and that's why my charts are so important. Within reason, when are you going to buy? When things are certain? Like I said, we're going to be up 2,000 points. You're going to be doing the chase game again. Trying to jump on a moving train, a fast moving train. That's what the techs do. So let's get back in the technicals. So this is looking good. And what would be nice, given this little window of bullish, a window of upside technicals that we're looking at going into the first part of October. Remember, middle of October is going to be boom, slap down. Always the case. It's the end of the fiscal year for the 800-pound gorilla, the mutual fund industry, and other institutions, but mostly the mutual fund industry. And they do lots of rejiggering their portfolios. And the markets are always down middle of October. Literally 99% of the time. Just for a couple of days. And it actually ends October on a positive note. Believe it or not. Just giving you a little crystal ball view. All right? And see, that's exactly what's going to happen. So given that we have these bunch of days in front of us, going towards the first part of October, from a date standpoint, if somebody wants to say, hey, Frank said that, so we didn't give me a date. Okay, I'll give you a date. I would say 1, 2, 3, 4, 5, 6, 7, 8. I would say by the 12th of October or the 8th or the 9th of October, we have a fair shot to remain up on a upward trajectory. So if that's the case and this happens, we're going to break out. The stores are going to break out. And it doesn't matter. Like I said, once these are turning, it doesn't matter how volatile the markets are during the day. And then they're going to get overbought. And I'm throwing out dates. 9th of October. By the 9th of October. Is it going to be up every single day? No. But I'm talking the general direction. Now, what's most important, and then once it gets overbought, same old story. Doesn't have to get like a crash down, but you're going to get a pullback. It's called a reset. That's standard procedure. And for a lot of you new options traders and stuff, just stop living in a world of like dreams. Live in a world of reality, you're going to make a lot more money. All right? Stop drinking the Kool-Aid.
Hey, Frank,
Go ahead.
just wondering what kind of power do you think the vaccine is going to have on the markets? Let's say if it comes out middle of October.
Look, if a vaccine comes out in middle October and it's administered and somebody actually gets cured by it, that's a
Yeah,
different story. How many vaccines have come out over the last month or two? Answer me. Quite a few. Oh, we're
yep,
in phase 3 clinical trial. I mean, I'm talking about a vaccine that actually works. Look at those vaccine stocks. They actually have done nothing over the past 2 months. Yet they have the positive trials and the results have been fantastic. Look at Moderna. Look at I know Regeneron's recently going higher. Look at Gilead. Look at AstraZeneca. So I agree with what you're saying. But just because a vaccine is politically acceptable means nothing to the markets. It has to work. So let's say, for example, which is really bullish, that cruise lines and stuff have these COVID tests and everything, so people can go in, which is actually common sense. So before you get into a plane, they give you these fast-moving COVID tests, and that's why companies like Codex and some of these smaller companies, CODX and stuff, are in a very sweet spot because they're not there to cure you. They're simply there to make sure that you're clean, so you can get on that plane, you can get on that cruise line, you can get into any other modes of transportation, and let's get back to a little bit of normality. But aside from actual vaccine announcement, and if it's a real valid announcement, I'm totally with you, Paul. The markets will zoom up 1,000 points like nobody's business. And the bullish scenario that I painted before, we're going to go back, we're just going to move real fast. But the question is, just an announcement itself by the government saying, oh, this vaccine is now approved, means nothing. Because it's already been done so many times over the last couple of months. Yes or no, guys? Yes or no, guys?
Yes.
Somebody else? Yeah. Like, think common sense. How many times do you have a great company say, we have this thing, this actually works. This, and then boom, the stocks do nothing. So yes, I agree with you, Paul. If it's a valid announcement and it's something that truly works, not just because the government says it works, to be honest with you, then we're zooming higher. So that's the answer to the question. So let me just continue with this one a second. Now, the most bullish part from a technical analysis standpoint, which I am waiting for, and I'm starting to see it, is the MACD. This is the Mac Daddy. Okay, when the Mac Daddy wakes up, that's when the big boys, given this is S&P 500 futures we're looking at, the big boys wake up. All right, and it is waking up. And I'm going to show you. You guys can see it. I don't need to show you. First of all, we have a positive divergence right there. We made a higher low on the MACD while the markets made a lower low over many days. Secondly, this is the most important part. We need the percentage K, percentage D lines and all these different, these two lines to start to turn. We need the area MACD to actually go positive. And we have, look, it happened here, started turning from less overbought. And here we got really overbought. Almost as overbought as when we crashed during the initial stages of the virus. Okay, so once this starts to turn, you want to be biased long. And I've said this many, many times. This is not rocket science, guys, okay? This is not rocket science. You can beat billion-dollar fund managers just by following these simple things. Trust me. The MACD here went so deep that I got to like keep on squeezing my chart to even get there. This is what happened to the MACD. It went to minus 225 right on that period of March 22nd, minus 23rd. Don't expect to see that. Okay? Don't expect to see that. So when you hear some of these bears come out and say, oh, we can retest the March 23rd lows, you know what I tell them? Go to friggin' hell. All right? Just scaring people to stay out of the market is the worst thing that these people do. And they keep on doing it. I mean, they've been doing it for decades. And more recently, since 2009. Like, I don't understand. Like, they just don't want anybody to buy stocks. And mom and pop have stopped buying stocks. And when a slew of traders from Robinhood and other, and of course, the other boon was that there's no commission on trading now, on stock trading at least. Options commissions have minimized tremendously. So when they get in, then the big shots come out and say, "No, that's not a good thing." Like, why not? Why should the big shots on Wall Street, who first of all are mostly bearish on the market, why should they be the only ones privileged enough to buy stock and say, "Oh, now is the time to really buy"? Why can't the common person buy stock? Let the Robin Hoods of the world, dumb money or not, and I'm sure that's not all dumb money, that's for sure. But we should all be involved in the market. Incentivize people to buy stocks individually. Trade options. Get a little greedy. I don't care. That's what the market's all about. Places like China, places like Hong Kong, places like India, to name a few. The average person trades like crazy, and they get a little nutty. They get really nutty. But that's fine. At least they're excited about their own stock markets. So what's wrong with us? Why aren't we ever excited about our own stock markets? Look at some of you when you got really scared. Oh no, I'm not gonna buy the stock again. That stock hurt me. Like, who gives a shit? I'm serious. I'm not just being patriotic or anything. I'm just telling you straight out. Let's get excited about the United States stock market and these great companies that are in it. So many innovative companies doing so much stuff that have changed the world for the better. Stop being scared of the stock market. It doesn't matter how crappy you feel a certain couple of days. And that's the problem with America, or at least an analyst and stuff. They just don't encourage people to buy stocks. Like everything's really bad. Oh, Apple's not going to go to zero. Yeah, the Apple 5G will explode in your face. Let's go buy a Samsung, instead, and give the Koreans more money. Anyway, you know how I think, all right? So the bottom line is embrace the US stock market. And when things get cheap, focus harder. Those are the best times to learn. That's when you got to really look at the charts, understand that how things are bottoming, how we have positive divergences, how this line is turning, how this is now breaking out over the range, and what's happening on the front end, which is the prices. Look, it broke out right there. Now this is a daily chart, so it's more reliable. Why is a daily chart more reliable? So I don't want to wait for an answer from somebody else. A daily chart is more reliable because it's just less noise. Each candle is one day. A 15-minute chart looks like a monkey on a hot tin roof, right? Wild. Yes, we see a pattern, but still, it's fast and furious, like every 10 minutes. But you look at a daily chart, it's more well-behaved. You start to see what's going on. So basically, if the markets hadn't turned, we would have come down to 3,100. Remember, over a couple of days, over a week, we move in 100-point intervals. That means another 700 to 800 points on the Dow, ladies and gentlemen. We'll be down. And that line was shown just in case, right there, right there. And then, like some of these guys on Fast Money and stuff, I forget the guy's name. He said, no, I'm expecting the markets to go down to 29.50. Well, I have that line drawn too. I don't think we're going to 29.50 right now. We might do that. during November. Seriously, if the election craziness goes really crazy, we can go there, and that line is already drawn there. That was the big breakout that we saw on retest, the big breakout from May 25th. It's all there in the charts, but I'm not going to project that far. But the lines are there. So when things get really crazy with the volatility in the market, these are the best times ever for traders to learn about technical analysis. You cannot learn about technical analysis when the markets are simply going higher. You learn about technical analysis and patterns in real life, and that helps you manage your money better when things have a consolidation. And if I look at this chart here, this is, to me, it's still a bull flag. A bull flag, which, by the way, right now has broken up. See that little green dot? Let's do this here. Focus a little bit. There you go. So all the way from down here, we had a nice uptrend, and we had rough days. Oh, yeah, sure. So this might, to the average TV commentator, looks like, oh, this was a straight line up. Bullshit. It was never a straight line up. We went up, we gave back a couple of 100 points, we had an inverted hammer, which went lower, then we turned around. No, we did not go up in a straight line up. For the average person and traders can never be average in the way they look at the market, especially my traders. My Clueless Day Trading Traders members, one of the things that I really want you to take away from what I try to do and share with you all is never look at the markets like the other traders do. Look at the market like a matrix. Look at the market in the form of these charts, your own charts, the structured charts I put through, and everything else that you draw on your own. That's how you got to look at the market. So right now, here's your mid Bollinger, which also happens to be this rising wedge, which had broken out back on the 5th of August. Okay, so it is pretty much at the same point here, and that's 3364. So 3364 is almost 66 handles from where we are right now, right? 66, which happens to be right here. And mark my words, these things have come more right than wrong. And you're going to see big sell programs here. So 66 points times, let's say, let's take a average of 8. You're talking another 500. From here to here is 66 handles on the E-mini. So I'm going to put SP. Okay, so that's roughly 530 points on the Dow. And that can happen this week. Okay, that's 530 points on the Dow Jones. This will turn, and that's your mid Bollinger. So first level is 250 points. The next level is 530 points in total. That's what I'm looking at. And of course, I'll be following these charts and not just relying on these calculations. All right, let's speed up a little bit here. So far, this Bollinger, which is really stretched to the downside, by the way, needs to start turning. It doesn't do it in one day. It takes roughly 3 to 4 days for these charts to start to turn. So we need consecutive up days. Just letting you know, to push and turn these technicals. Remember, these internals don't just move on their own. They're all a function of the root, which is the price. You guys understand that part, right? You guys understand the fact that internals or these internal indicators are not just coming up on their own and just moving and slipping and sliding on their own. They are being dragged up and down depending on the price movements of the indices of that particular index or the price of that stock. Yes, you guys understand that, right?
Yes.
Exactly. Believe me, how many people I've trained and they said, no, I thought they just moved on their own. Yeah, dude, how can they move on their own when the root, the basic component of it is the actual price of that asset, whether it's a stock or the SPY. So far, looking good. So far, looking good. While we're at it, let's take a look at the weekly. I personally haven't seen it since last week. Let's see here. The weekly is tricky. So this matches it with it jives in with what I just explained to you, that we go up and then we have a nice correction towards the middle of the month, starting at around the 12th of October. All right, because the weekly is starting to turn, but it still did not get seriously oversold. It gets like this seriously oversold, you buy and just sit there for 2 weeks. Don't even look at the screens, and you make money. Okay, but we're not there yet. So we haven't come to the mid Bollinger yet, even though this is still a bull flag. You can see that. This is the worrisome part. We need to see the MACD, see how it's crossing over down. So this is telling me exactly what my thesis and my forecast. Somebody please mute their mic. I'm getting a lot of feedback. Please, thank you. So this, if this starts to turn like this, you better be shorting every single rally that comes out. All right, but that's on a weekly basis. Each candle is 1 week. That's 5 trading days. Okay, so let's see. Again, if things work out, we have the right vaccine, which actually works, not just an announcement. We get the COVID tests and all set, and all of a sudden airplane bookings shoot up, which I say, why not? I mean, it makes total sense. Do a COVID test. Everyone should have a COVID passport. Seriously, like get tested so they know you're clean. And then you just flash that and say, hey, see you later. You know, I'm right there, and then you know, on that ship or on the plane. All of a sudden, boom, U.S. economy just shoots up. So anyway, that's your weekly. Now, let's move on to let me speed this up a little bit. Let's look at the S&P 500. By the way, everything I'm talking about, I'm keeping this simple, but I'm keeping it very precise, but and also technical to a certain point. So I hope it's making sense to all of you, right? Yes? No?
Yep.
Okay. Because I don't want to overcomplicate matters. It's the same old stuff every single time. All right. So I like to keep it simple for myself and do that and do it for my members. So here, forget about all the patterns and stuff. It's kind of a bull flag, but it's a more of a consolidation channel. So now we have this. So this S&P on the 24th, which was Thursday, and this is Friday. So very bullish. Look at the size of this candle. Look at the size of this candle. Now, once you break the 50-day moving average, which we broke on the 18th of September, you get every single grizzly, bear cub, bear mama, bear papa, like you name it. Anybody who just like pissing on the U.S. markets, you know, whether it's Gunlack or whether it's some other analyst, whatever, they just come out of the woodwork like no one's business. We told you so. Yeah, you told me so. That's why you kept people away from the market on this huge multi-thousand point run. But they'll say, I told you so. And really annoying, these guys, all right? Especially the dogmatic bears. You can be a tactical bear, which means you're bearish over a day or maybe intraday or maybe 2 days or 3 days. But these people are constantly bearish. Seriously annoying. All right. Now, so once you break the 50-day moving average, they all came out of the woodwork. All you could hear was negative, 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 negative. Okay? So now, every single time, 100% of the time, 100% of the time, you break the 50-day moving average, you will come back and retest the back end of the 50-day moving average, attempting to break out. It is a given. So what more do you need to know? You want to stay long the SPY cheapo calls, doesn't matter what the volatility is, unless we completely break down below the 3200 level or 3195. But so far, we are on the way to test 33.51, which is the red line here, the 50-day moving average, simple moving average, SMA, or 33.53. So that's roughly 55 times 8. That's roughly another 500 points or 450 points on the Dow. It is going to happen. And if I'm wrong, that means something went really wrong with the US economy. Mark my words. If I'm wrong on this thesis, that's going to happen real fast, this next 500 points. Telling you right now. So if you're not positioned and you got all scared out of things, and you call the mommy, let's, when are we getting there? I need a change of diapers, right? They're going to put out there sometimes to the mommy, are we there yet? Then you are not going to make any money. It'll be the same old routine. The volatility algos, the massive panic, your emotional thing because you're just looking at prices and not focusing on charts and the internals and stuff that I put through, and these intense webinars that I do a couple of times a week. You're not listening to the broadcast. You're not positioned right. You will see the market. It's already started. It already started on Friday. It actually started on Thursday. So if you're sitting there twiddling your thumb, like wondering if you should have a position or not, what are you waiting for? You're waiting for certainty? When it kisses the 50-day moving average, and we're going to be selling for fat profits, what are you going to be buying there? Because right when it kisses the 50-day moving average, there's going to be one fat sell program, which, if the conditions are right internally, will get bought and you go higher. So please live and learn. All right? Pure panic and fear will never, ever make your losses up. And first and secondly, make you any money, period. And that is happening across the board. I felt it. I saw it. I don't need to see your face. I see everything, that the movements, the kind of responses I get, the DMs I get. It was pure panic. And I even mentioned that on Wednesday's webinar. And that's what you want to see. Pure fear, like the whites of your eyes. And don't tell me that some of you didn't go through that. That's when you want to start nibbling in. So yeah, we're going to the 50-day moving average. And we're most probably going to go to 3,400 by the 12th or 9th of October. So what are you going to do? Sit there and just twiddle your thumbs, and again, I keep on saying that, or suck your thumb, like, okay, I'm just going to wait around. Wait around for what? Wait around for what? Think what I'm saying. I've done these things for many, many years. And believe me, there were certain days I felt like crap because I kept on setting up those trades and they kept on going down after I took profits in the morning. And my account's a little bit bigger. I'm sure it's smaller than a lot of my members, but still. So it doesn't feel good to look at that P&L at the end of the day. But who the F cares? Because within 24 to 48 hours, there's a printing money like no one's business because I got in on the cheap and alerted each one of you to buy on the cheap. And some of you did, and God bless you. It's not luck. This is not a luck-driven market. This is repeat again, algorithmic high-frequency trading, black box supercomputer manipulated market. It has always been like that for years and years and years, and it's going to get more and more like that. What do you think? It's luck? It's luck that the McClellan oscillator went to minus 74? Come on. All right. So that's what we're doing. We'll keep it real simple. We're going to 50-day moving average, and if we bust a move, then we're going to basically get towards the 20 and the 34-day moving average. That's another 320 points, and then we're going to try to break this barrier. This barrier was the one where we failed miserably, 34.27. And by that time, the markets will be overbought, and I can assure you there'll be sell programs on each of these levels. Okay. Want to hear another bedtime story? Somebody asked me a question, okay? Because I'm pretty much, I'm just showing you stuff as pretty much what's going to happen.
Yeah, and Frank, you touched on the McClellan oscillator too, like the weekly, really good too.
Actually, thank you for reminding, because that's what I was going to look at next. Yes, I have it right here. So this is my NIMO. All right, NIMO. These stupid ads. All right. So McClellan oscillator is just, don't make this complicated. When it gets really fugly in the markets, the McClellan oscillator gets really low. And as things start to improve, it starts to move higher. And when things get a little too happy, the McClellan oscillator, let me get my drawing tool. And please, all of you listen. I mean, I've explained this so many times, but still, some of you are new. We went to minus 79. Like, holy crap. And that was on Wednesday, right? Wednesday, yeah. We went to minus 79 every single time. I mean, this was horrendous. This was back in, during the COVID meltdown. Aside from that, and that's an aberration, you normally never go to 136. You go minus 136, minus 139. That's like I said, that's like the ultimate bargain prices ever. All right, the ultimate. And that's when nobody buys. So forget about that for a minute. Most of the times you go to minus 45, you go to minus 70, you go to minus 51, you go to minus 68. Look, I'm not making these numbers up. I just want you guys to look at this, all right? Minus 79 that we just went to last week on Wednesday, I believe. You gotta buy. I even said that on Wednesday. We had a great attendance on Wednesday, just like tonight. And I told you guys that. Just gotta buy. It has never been wrong. It really hasn't. Based on normal pullbacks. I mean, that was a COVID pullback. That was just like the world's falling apart pullback. And that was a great buying opportunity too. Stocks are
Hey,
up,
Frank?
what, no, 1 second, let me finish. So
Yeah.
basically, at this point, you're buying. So I don't want you guys to like, you can, look at this, take a screenshot of this chart. I mean, basically, it won't get overbought till we go slightly over zero and hit the upper Bollinger, which is this red line band, all right? So that fits in with my time frame, the first week or so, first 7 to 8 trading days of October. We're going to get overbought here unless this line turns around. So without getting too complicated, this is starting to turn, and the full stochastics had a positive divergence. It is starting to turn. What's a positive divergence? It made a higher low since August 24th, while the markets made a lower low. So that's called a positive divergence. Whichever the case, this is saying buy. Paul, go ahead.
Yeah, that's great points. And the whole tricky thing for me during this correction is the McClellan oscillator really threw out a head fake there. Because if you look at the beginning of September when this whole correction happened, it looked like the McClellan oscillator was quite oversold, and it looks like the oscillator, the stochastics were kind of mid range, and then it just really.
So here is what happened, and I noticed it too. Okay, yeah, it is. I mean, look, nothing is perfect. I mean, so bottom line is, yes, we went down to minus 68. Everyone see that right there? Minus 68. Let me clean out this thing here. That's a very good point you just brought up. See minus 68, guys? So that was on the 8th of September. After that, it started to go up on the 9th, on the 10th, on the 11th of September, it was here. It was minus 51. And then it went up and touched the upper Bollinger. That was positive 4.30. See that? That's what I'm saying. These upper Bollingers have to be respected, because once it gets there, don't expect these type of moves. These are massive moves in the market. All right? But just a reflex bounce that I am saying we are going through right now will take us to the upper Bollinger, and you gotta sell, or at least reduce your position, or do the hedges, buy SPY puts, or do something. Because by that time, the VIX will be quite oversold, technically, and markets will be quite overbought on a short-term basis. So the answer to your question, this was the confusing part that Paul, that a lot of people were confused. But the minute it hit that, it looked like it wanted to maybe go higher, but that gave in and created this massive double bottom. Now, here is the bullish part that I'm going to tell you. Okay? This is the bullish part. We have now created, forget about this one, these two, the minus 68, minus 79, we have created a beautiful double bottom. And if things play out right, meaning that there are positive catalysts in the market, the stimulus bill, other stuff, and we don't get into another like massive war, tech war with China. By the way, Sunday news was that a judge ruled down the ban on TikTok. So that's going to help tech stocks tomorrow a little bit. Okay, some of them. So in other words, they're still talking. As simple as that. So here we go. So we had created a double bottom. So that means we could go shoot up to almost up here, which was the case back in August, and that's a lot of points. That's like 1,000 points on the Dow. So there's your NIMO. Now let's take a look at the weekly. This is your daily chart. Are you guys still with us so far? Yes? No?
Yes.
Maybe? Okay, good. Because this is good shit, I'm telling you. Okay, this is stuff that you could be sitting in a Harvard business school investment class, financial analysis class, and they don't even teach you this stuff because most of them don't even know. I'm serious. So I'm giving you some real good stuff here. So stuff that you're learning, you'd have to pay $50,000 to Online Trading Academy or those other big schools, and they won't even get to this intense level of real predictive analysis. They'll give you the basic stuff. They'll teach you supports, this and that, moving averages. Okay, these are the patterns, blah, blah, blah. And then people pay how much? Like 16, 17, 20,000 bucks? Come on. It's shocking. People still do that, right? It's like they're signing up for Online Trading Academy and to learn like basic things. Wow. Okay. So be happy that you're here, guys. All right. I'm telling you that right now. So let's put it this way. This is a mixed picture. This is definitively a double bottom, the full stochastic. This is the weekly. This is like going out into November. So this is good. This is good. We have created a nice bottom. This is still pointing down. No good. And this is still pointing down. No good. So in other words, we need the MACD to turn. We need this to turn on the weekly. That creates a sustained rally. And this can go as high, and this to go into the black from the red. This is the weekly chart. So don't bother yourself too much with this, but the weekly charts are non-confirming on a sustained rally. And that fits in with my thesis, my predictive analytics that I just told you in the past, hour. So in the meantime, earnings, major factor, the political situation, major factor, trade wars, tech bans and stuff, major factors. These are negative catalysts if they go overboard. And that's basically it. Now the stocks, it's 10 o'clock, so I'm not going to keep on going. All right. Look, you know the stocks we trade. We trade Apple. We trade Netflix. We trade Facebook. We trade. I haven't traded Amazon lately because options are a little too expensive. We trade Tesla at times. We trade Nvidia. We trade AMD. We trade Square, Documentum at times, DOCU. We trade Zoom. We trade Teladoc. We trade Roku at times, even though it's kind of a freaky. It moves up and then it comes down, but overall it's going higher. And then we trade a bunch of biotechs, more on the swing side. That means we hold them more than we trade them. Then we trade Boeing, which is a beast that you need to stay long. Okay, there's your Boeing chart. Well, my other Boeing chart's better on the other platform. It's just starting to go. Where's Boeing going? Look at my Twitter feed. I already showed you guys where Boeing is going. That's some phenomenal charts on Boeing. And I'm going to bring one in. Okay. Let's go over this one a quick second. Okay. This I put out on Friday. Now I know a lot of people were so scared that they had to literally go, not just get new diapers, they had to go to the laundry, to whatever. Okay, I'm just kidding around. So bottom line is, maybe they're not looking at the Twitter feed like, oh my God, I don't want to see this, the market's nuts. It happens all the time. Human behavior is so predictable. It's so predictable, it's not even funny. Okay? But these charts are drawn to help you all, not to help me, because I'm the one who's doing it. It's telling you to the most precise level where the markets can go to. I mean, what more can I deliver? It's telling you when to buy. It's telling you with the markers when the stochastics are totally correlating with the deep oversold conditions on the fast toes and the slow toes and the low in the market on the 24th with a hammer reversal. So I don't care how scared you get, whatever. Stay engaged. Don't trade certain days if you don't want to. Because the mind is a very powerful force. If your mind's not in the right place, then even if you love the technical setup and stuff, your mind won't let you act. Okay, I understand that. I'm not going to encourage that because I don't encourage fearful traders. I encourage boldness and aggressiveness when it comes off these big time sell-offs. That's when you got to be the most aggressive. That's why our friend Heisenberg from Florida, he went on a quick vacation with his wife, wrote that. He goes, you read his thing right there. Okay. Brought up the count at the end when he counted most. He was shit scared, but he acted. And that's why he could write that. That means he made cha-ching. All right? He's a good friend of mine. So what about this? Okay, these charts Where's the Boeing chart? And when I'm not at my trading desk, because I got some other stuff going on, so I got to run around a bit, then I'm showing you guys, I'm always connected. I'm showing you off my iPhones the charts. Big C. This stock is going to $100. I'm telling you guys to buy it. The options were just sitting there. Boom, it just started running. They were a late day algo program, went in and started buying it. So I showed it off the thing. Look at that. At 3 o'clock, they were just waiting around all day. You're wondering like, oh, what is it doing? Nothing. I mean, yes, the stock came up from 77. Well, yeah, it came up from 77 to 79. Okay, it's $2, big deal. This is a high beta, high momentum, powerful monster, big commerce that powers Facebook's shopping algos and powers Shopify and powers all these great companies. They build the software infrastructure so those guys can sell. And then right there at 2:45, bang, look at the volume. So a little bit has to be believed. The third thing is you just made some serious money right there. Here's the Boeing chart. For short-term traders who's not looking at, like, say, 6 months, whatever, this is the chart. Boeing tomorrow is going to open right here. Boeing closed at 158. It actually closed here. When I was showing you guys to buy the chart, we were buying it here. It's a beautiful double bottom. All the internals are validating this move. Then comes the news. Remember, technicals precede fundamentals. You know what that means, simple English? You're going to see technicals move prior to whatever news is coming out. Now, all of a sudden, the news comes out. The FAA, one of the FAA chiefs, personally is going to fly the 737 MAX. And then the news came out after the market closed, by the way, on Friday, that the European Commission likes the fixes that Boeing did. Of course, they liked it. So all of a sudden, you're going to see a slew of good news. And Boeing is going to go hit 170 so fast, maybe tomorrow, I don't know. And this chart predicted it. And this is not even the longer term chart on Boeing, which shows $250. So that's it, guys. All right. A lot of great stocks in the market, but some of them are going to be, the market is non-correlated. You know what that means? Just because the indices are higher, don't expect, this is where I was reading you the stats from. This is on my feed. So don't expect everything to be up. Okay? Exactly. You have to be somewhat selective, but I have certain stocks that I'm biased towards. Boeing on the big cap industrial side, there's so many. Square, which I think is a $200 stock on earnings. I do believe that. The charts also kind of point towards 198. Nvidia is a beast. Nvidia is looking to go back to 600. It's lots of points from here, guys. 50, 60, 70 points. So if you're waiting around to get another diaper change, well, while you're changing your diapers, okay, buy some calls. How about that? Micron coming up with earnings. Micron's kind of a mixed picture. There are a lot of different types of chips. They're not like the industry leader on something, on like Nvidia is and AMD is. They're there, but it'll give us a good window. If the stock goes, it's $55 or $52. I'm going to buy a few cheap calls. And the chart isn't that, isn't certainly not crazy overbought. And it looks like it wants to be in a range. What's other one that I like a lot? Oh yeah. Now Zoom. Now here's the problem. There's no problem with Zoom, all right? The company's just minting money like no one's business. The only problem is that everybody kind of plays Zoom, right? From the Robinhood traders to us sometimes. It's just like, and the stock is quite volatile. On Thursday they smashed it down. I told you guys to buy it. I bought it. It started going down. Well, it was kind of vacillating, but it kind of ended at low. I bought more. $4 calls. You know where those $4 calls went? Yeah, you should know because I put it out there to show you guys. $13. That's 300%. 3 times your money, which means you made 200% profit. Like, duh. All you have to do was bite your nails, whatever. I'm not going to give you some stupid analogy. What you have to do was just dollar cost average down, and bang, the stock opened up because they are signed up with, now they're with Amazon. They're on Amazon Fire TV. What more do you need? I even said that. So I know you guys have been very quiet and listening and stuff because, look, everything is a learning experience. But if you don't learn from these type of massive panic sell-offs, I don't know when you're going to learn. Learning doesn't come from happiness. Learning comes from pain. Okay? So if you have felt some real pain, well, make that pain into some serious gain. I'm not being a poet. I'm just telling you straight out. But if you constantly keep on being scared and that type of stuff, moaning and groaning, and not even having any real positions or whatever, then you're never going to make money. The real learning comes from technical market corrective sell-offs. That's where the real learning comes from. And my charts certainly are some of the best out there. No question about it. I will stand by it. Do I know exactly what the market is going to do? 15 minutes, an hour? No, I don't. Do I control volatility? Absolutely not. I wish I did. But am I overall? I don't need to ask anyone. I know. Fear is not a problem. Being scared at times is not a problem. Feeling disgusted looking into your P&L is not a problem. It's what you do with that is the problem that many of you have. Exactly. So if Zoom, this stock is probably a $600 stock. Now, given the market conditions, because now there's a lot of big funds that are a little cautious and stuff, I would say, okay, let's go back to at least 530. So you got 40 points in Zoom. And if they actually have some great numbers, which I think they will, the stock is going to go to $600. Teladoc, business is booming. And this is the one I'm most bullish on because it's just, one second. Write that down in your head, all of you. Real learning comes from pain, not from happiness. All right? Exactly. And that applies to life and in trading. First move is here, which is around 233. The next move is 253. High probability move higher based on their business and, of course, the telemedicine industry leader, you name it, blah, 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 blah. Another stock that is a huge beneficiary of these low interest rates, which we traded, did well, and I re-entered, and I'm going to just sit on it. This is a swing trade. Is Zillow. Is Zillow. Zillow's going to go to $110 to $115 because their business is going bonkers. Mortgage, 25% higher at the same time last year. Mortgage, people getting mortgages. Home sales are going nuts. And this stock is on a tear. Any quick questions? Because I'm devoting a lot of time. It's 10:20 p.m., so I got to start moving. Any quick questions, please?
Futures are on a tear. Futures are on a tear too.
Futures are up 14. That to me is not a tear. You know what? Oh, it's going higher. No question about it. Of course. And why shouldn't they be? I told you guys that last Thursday. I told you guys that last week. Why shouldn't they be? Why should futures be down right now? Can somebody tell me? No. So here we have consumer confidence on Tuesday, final Q2 GDP on Wednesday. These are very important things. Non-farm payrolls on Wednesday, wow, and unemployment rate on Friday. So we have a lot of catalysts which are going to determine the market. But you already know what the market's going to do. I just spent the last hour and a half explaining to you guys in minute detail what the markets will do, up and down. So you don't need to be blank. You just need to act.
Got the debates too, Frank.
Oh, the debates on Tuesday. Now, the debate's not going to, the market doesn't give a crap about the debates, honestly. It really doesn't. Look, the big money players, they know. Donald's going to hammer Biden. Biden's going to try to hammer Donald, but who's the real, who's the tougher guy if you think about it? Donald's, he's geared to attack, right? So he's just going to attack him and slice him and dice him. Then Biden's going to come up with that. And what's going to be the surprise element on the debate? It's going to be fun to watch, but there's not going to be surprise element, because the Democrats are going to say, yeah, Biden stood his ground. He highlighted all the deficiencies and the points of the Trump administration, and Trump is just going to go bang, 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 the same stuff. Economy's great, everyone's happy, like, oh, we're the best, like, going nuts. If you elect Biden, we're going down 900 zillion points, so it's going to be the same thing. I personally don't think, just the way I said about the Tesla battery thing, if you remember, okay, that's why I didn't even bother. Should have shorted it, but I don't like shorting Tesla. That it's a non-event. And so this debate, in my opinion, this is my political game theory opinion, is a non-event. Each side.
Hey, Frank, I would just say.
Yeah, go ahead.
I would just say that Biden, he's been reading off a teleprompter. He's had really no hardball questions from anybody. I don't know if he's prepared, and he's prone to gap a lot. So I think that could throw things off, especially when he's winning in the poll. Something like that happens where he's just a disaster. That could certainly swing the market if they're thinking Trump could possibly gain ground.
No, that's my opinion. No. See,
Okay.
I don't want to get into the political stuff of the whole thing. What is the debate going to change about the trajectory of the market based on that? I mean, I'm just curious. Anybody, like, what will Biden come up with or Trump come up with that is going to shock the markets? Tell me. Somebody aside from Paul. Somebody tell me. You guys are all smart people. What will come out of the debate that's going to shock the markets? Aside from one of them passing out.
Do you think the market thinks that Biden is winning, like the polls suggest, or do you not believe the polls at all?
The market, I've said this again and again, the markets overall don't give a crap. I know people don't want to hear that. Overall, the markets don't give a crap because Biden's not just going to come in and change the whole structure. In fact, he won't be able to change anything. And Biden and these guys are all connected with Wall Street too. So Wall Street plays both sides. It's not going to really change anything. Initially, the market will pop down a little bit, and then it's going to resume. It all depends on earnings, how our company's doing, how our economy is recovering, because overall, nothing dramatic will change initially, unless both the House and the Senate go towards and the executive government are all, let's say, is a Democratic sweep. In that case, the markets will be a little bit more nervous because then they could possibly pass some stupid anti-business bills and stuff, which the markets won't like, but I doubt it. So that is one negative outcome if all three go on one side. Aside from that, the market likes a little bit of dysfunction. So yeah, that's just my opinion. I've lived here a long time. I know, it's just the way it is. All right. Markets don't give a crap. Markets crap Markets give a crap about whether Apple's 5Gs are going to sell out like crazy, and whether their app business is going to get hurt because of the fight with the developers, or whether Nvidia's next chip is going to do this, or whether Canada Goose will get bought out for another 80%. That's the way it goes. Anyone else with any quick questions? You guys already know what the market's going to do. If you wake up and then the markets are up here, I already explained, like, we could be up 30 handles. So you want to take some nice profits. And there's going to be some selling at that point. So I don't want to keep on repeating myself. Any other quick questions? Because I really, a little tired right now. No one? Okay. All right, K-Bot, I know you came in late. You can always review the link that's going to go up in about 20-25 minutes on the Twitter feed. Thank you for attending. Really, guys, like I said, I do get energized when I do these sessions because I have to explain things. I have to think a little bit like somewhat smarter because generally I'm kind of clueless. And all these things, they're great. They're great. So I think we're going to have a good week. And more importantly, you got to be selective. And more importantly, I already gave you the day count as to how far the markets can go and how many days. And I think I have a pretty high hit ratio when I do those day counts and stuff. And what's going to happen? Middle of the month, it's going to be definitively pulled back. Now, if it doesn't happen, great. Great. But in the meantime, stay vigilant. Okay. Thank you. Good night. See you guys tomorrow.
Night.